It's a bit of a weird time to be a real estate investor. Prices have risen dramatically in a short amount of time. Many investors are happily paying over retail price for properties. Interest rates are on the rise. Inflation might not be so transitory after all. I'm wearing a hat now. Things have gotten weird. What's up, internet? My name is Alex, and since the last time I talked to you, I've moved to a new house. I'm in the process of building this tricky new YouTube setup. It's not done, but I hope that you're gonna love it when it is. I had to make this video because my good friend Scott Trench recently asked me to create some content about my thoughts on the real estate market in 2022. And when the CEO of BiggerPockets wants to know what you think, you leverage the situation as hard as you can to get clicks. First, I'll tell you a little about my background in real estate and where I'm coming from, and then some pragmatic insight about what you can do to succeed in the current market environment. And then I'll tell you what really deeply scares me about real estate right now. My goal with real estate was always to buy houses for reliable cash flow and then hold them forever. I never wanted to be a business owner. I never wanted employees. I never wanted to be some kind of mogul. I just wanted freedom. Freedom from being stuck in a job I hate. Freedom from the stress of worrying about money. And freedom to spend my life on meaningful experiences. Let's go back to 2013. I had spent the last few years learning personal finance and getting my net worth out of the tragically negative. I had saved a little bit of money for the first time in my life, and I was looking for something to invest in. I stumbled across this podcast called BiggerPockets, and I became obsessed. I rush off to my local MLS, and I find that it is riddled with deeply discounted foreclosures, and at the time, no one was interested in real estate at all, which even at the time seemed a bit bizarre. I used to ask my investing buddy, how come everybody isn't doing this? Now everybody's doing it. Between then and now, I bought my fair share of homes. Not as many as I should have in retrospect, but more than most. I bought single family rentals until about 2019 when the big inventory of bank foreclosures I was buying from had dried up. And that's when I started watching people pay retail price for houses rather than buying at a discount. That was weird, and it made me quite suspicious. So I learned how to buy apartment buildings instead to get away from the idiocy of the masses. And then in 2020, we had this unexpected meteoric rise in asset valuations, which priced me out of even the apartment buildings, just as I was starting to find my groove. Look, I'm a very risk-averse investor, probably too risk-averse. My goal as an investor is to buy things that are below what they are worth, or that have a very reliable way to create value through improvements. If your goal is similar to mine, to buy underpriced homes for cash flow, then right now is a very difficult time to be a real estate investor, especially if you're new. Price and rate increases have thinned profit margins. The competition is extraordinarily high, coming from large firms that have low cost of capital that can buy assets at higher prices simply as a hedge against inflation. They don't have to make that much money. And alternative investments like stock market and Bitcoin are collapsing. Well, stock market's not collapsing. Bitcoin's definitely collapsing. There are absolutely ways to succeed in any market, but it's really important right now to not let the real estate hype bait you into buying a lousy deal. The good news is that much of what I loved about real estate from the very start still applies. Sure, you can't get underpriced properties easily anymore, not that easily, but real estate is still a very forgiving asset class. Even if you had bought at the height of 2007 before the collapse and you had held on today, your property would be worth more than you paid for it. Fixed rate debt is still a good hedge against inflation, and rates are still pretty cheap despite the pathetic whining of people who have to pay 6% interest. So if you're a buy and hold investor and you're playing the long game like I do, you can still make moves if you really want to. I suggest keeping a higher than normal amount of reserves than you would in previous years. I'd buy in markets with more population growth than I would have in the past. Also in the past where I would have bought C-class properties that cash flowed heavy. Now I think nicer properties with more stable tenants are probably the better play. And if you're a real estate business owner, like a flipper or wholesaler, then the timing of the market doesn't matter that much because you're gonna have to learn how to succeed in up and down markets. I have been slowing down on buying in the last 18 months. I am, for the most part, a buyer only. And it's been a seller market since around mid-2019. I've been selling a few underperforming assets and buying very little. I've done some apartment deals and I've flipped some homes. I'm quite thankful that I started almost 8 years ago because the equity and rent growth that I've experienced has allowed me to be patient a bit. Prices are up, rates are up, margins are down, good deals are harder to find. The whole thing scares me a little bit. And as I said from the start, the point of investing for me is to create freedom. I don't want to create a financial set of golden handcuffs. So I've taken this time to focus on other things that I believe are still grossly undervalued, like creating content on YouTube, which is why it's so important that you subscribe. It's really important to my financial well-being. I'm not a big fan of sitting around waiting for better conditions either. I don't want to advocate for waiting, but just personally, I'm making fewer bets in this market. If you're new, you might not have that luxury. And I think it's not a bad time to be picky, patient, and even a little skeptical. Let me tell you where I see the biggest risk in real estate in the economy right now. Last few years, I've learned a ton about real estate, economics, history, and human behavior. And the number one thing that I've learned in the hundreds of books that I've read is that you can never trust a narrative. People can take a dump truck full of data and paint a very optimistic picture of what the economy is going to do, and it all might sound perfectly plausible and reasonable, but people cannot and never have been able to predict the future in any reliable fashion. A great sounding prediction is worth nothing more than its entertainment value. In 1929, they had an unlimited amount of reasons why the market fundamentals were sound, and then the market tanked 90%. In 2001, everyone knew tech was going to be the future, and then it was the future. But before that, the dot-com bubble cost investors nearly 80% of their earnings. And in 2008, real estate prices were sure to only go up just before the entire global financial system collapsed. The masses will always have a narrative of why they are safe from calamity, why they have some data to back up their position, and why they will have the utmost confidence that they know best. Their confidence spreads like wildfire, and everybody follows, and it creates this mania. And eventually something bad will happen. The market confidence will drop. People will rush to leave the market. Prices will fall. Cracks in the fundamentals that weren't seen before are exposed. And then in a few years, when everybody's done licking their wounds, they will explain to you how the whole thing was obvious from the start. It's not obvious. It won't be obvious. I don't know what's going to happen in the future. I don't know. I'm not claiming we're in a bubble. I'm not claiming anything. I don't think prices are going to drop, but I didn't think prices were going to rise so much over the last few years either. We are certainly in the most volatile point in the economy that I've ever been alive for. And despite all of this risk and these increased unknowns, people seem to be more confident than ever about the future. That's inverse to what a proper response to risk is. People are creating this narrative about sudden housing shortages that I don't buy, how inflation will only be a win for real estate investors, which I also don't buy, and how real estate is super safe, so prices will only go up, which I definitely don't buy. This is textbook "this time is different" talk, and I'm not buying any of it. And that is ultimately what scares me most. It's not the market or the fundamentals, it's not the higher prices, it's the cultish optimism from people who have only been in an up market spreading unbounded mania. It scares me. This is a very difficult video to make because on one hand, I'm more worried than ever about the future, and I also know better than ever that nobody knows the future. I have no idea what's going to happen. I'm watching people buy properties for $150,000 that were worth $90,000 only 2 years ago. I'm watching people pay 4% cap rates on C-class properties that would normally be 8 caps. On the other hand, I also thought the market was going to crash in 2007. I bought the majority of my properties since then and made a ton of money. I don't know what's going to happen. I have no idea. Sorry, Scott. I know sitting around waiting is never a good way to get better at anything. If you have capital that needs to be put to use, then you have to participate in the market as it is. Waiting for a better situation is just a fool's errand. Here is a quick list of things to consider before buying your next investment property. Your goal of investing is to buy underpriced assets, not assets at retail price and hope they go up. Have big cash reserves. Cash is still the greatest risk mitigator of all. Be picky about what you buy. Don't assume rents will increase. They might, but don't assume. Buy for cash flow day one. Don't let your ego drive the bus. I swear to God, there are people who are closing on houses just to post a win on social media. If you do this, you are an idiot. Don't believe the opinions of whatever internet celebrity you happen to think knows the future.
Think for yourself. Question authority.
Real estate is forgiving. If you play the long game, you will probably win. Lastly, Scott Trench, I hope this video was everything that you dreamed of, and you should probably share it directly on the BiggerPockets forums because I worked hard on it and I deserve that. Thank you for watching. Remember to press subscribe, comment, like, share this video. Tell me what other doom and gloom you want me to spread because I'm always looking for good ideas to make videos about. See you for the next one.